Yes, I love it here. Microsoft very rarely pulls back to the 200 simple moving average. We really don't see these kind of discounts on Microsoft stock. It's down about 13, 14%. The last time we got this good of a deal was during the COVID crash. So for me, personally with Microsoft, really, I'm averaging into this one on a very regular basis. When I get pullbacks to the 50 simple, that is a spot where I really like to add. I love Microsoft for a variety of reasons. I think that they have a wide range of product segments, and I think that the wide ranges are each growing individually. Everyone wants to focus on Azure, which is really important, and it is growing a lot, but think about the video game segment. I think that the ATVI deal is going to be huge for Microsoft. They've already been big in video games. People love those Xboxes. They cannot stay on the shelves. And I think in the long term, this is going to just be a fantastic growth company.
The Microsoft president, by the way, agrees with you. He is in that White House meeting right now saying, our business is hugely dependent to the success of the U.S. economy. Just look at the positive effect on the markets today. So there you have it. Making the case by pointing to this one, which you say is a buy here. Let's move along to Costco, Danielle. Surprisingly, that one is down 14% to start the year. But again, we're coming off a monster year. We are up, 50 to 60% in 2021. Why do you think this one's a buy?
So I love Costco again because, yes, it's down 14%, but I really like to look for stocks that are down around 10 to 20% for solid areas for long-term buys, especially on a stock like this that was previously so strong. Costco fits the bill for a variety of reasons in addition to the technical reasons. It's also done really strong on earnings despite all of the headwinds. We have inflation, they've had to raise prices, but Costco is able to continue to grow and make money despite their tight margins because of memberships and also the e-commerce platform that they're continuing to grow. So I like it for all of those reasons, in addition to the fact that I just think that people have changed their habits throughout the pandemic and they're cooking from home more and they want more deals.
We certainly are. Certainly are. All right, let's move along. Your final pick is Lowe's. They were also up about 60% last year in this big home improvement boom, but they've taken a beating since issuing disappointing sales guidance for the year. They're down about 10% since Jan 1. Why this one? What about Home Depot?
So I like Lowe's and Home Depot both. The reason why I like Lowe's a little bit better is I just think it has a little bit better relative strength. And I think that they're doing a really good job appealing to especially DIY people. You have a lot of millennials going out right now, buying homes, making babies. They're not buying a lot of new homes. They're buying older homes and they're remodeling them and they're going to places like Lowe's. So I think that that is evident not only just from a social factor, but it is also evident in their earnings. We've seen Lowe's beat earnings quarter over quarter. They've traded higher post earnings. We have high anticipation of those earnings reports. Home Depot's doing a really good job as well, but they don't have as positive of a reaction post earnings, which is why I like Lowe's a little bit better.
All right. So those are your buys, but we call this 3 buys and a bail. So here's one Danielle says to bail on. Drum roll, please. It's Roku, down 60% over the past year. Some might say that's a huge bargain of value, Danielle. Why aren't you buying it?
I just have never liked Roku stock. It was just on this massive run. It was a momentum run, and it was fun to trade in the options market while it was going to the upside. And of course, if anyone's had a great time shorting it on the way down. But the reason why I don't like it, there's a variety of reasons. Well, number one, it's fallen 67%. Because of that, number one, you have so many people that are in this stock that have bought it probably up near the highs when the momentum was so strong. And anytime you see any kind of positive news in this stock, it rallies and you're going to have those people wanting to get out. So it just creates so much overhead resistance. The technicals have broken down. I also think that the case for the Roku in general is not very strong because we have smart TVs now. Is it really a necessary product? I think the Roku, at some point is going to turn into something like a VCR where it's just not necessary.
Shepard Smith here. Thanks for watching CNBC on YouTube.